The Share Pickers Podcast with Justin Waite. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
And joining me on the podcast and on videos, John Meyer, mining analyst and partner at SP Angel. And I tell you what, he's looking very smart today. Thanks. It was just for viewers, if you want to check John out. By the way, a bit of backstory there. John started off with a very show busy story about his tie there. It went downhill a little bit. But you did say, John, that tie, and it's very relevant for the news out, it's a BHP Billiton tie, isn't it?
It is from Billiton years ago, before Billiton merged with BHP. So it got... Look, it's a cast-off from the directors.
Yeah. Well, you started off by saying it's a Billiton director's tie. Oh, yeah. And you went on and explained it's a cast-off, essentially, when they merged, they got rid of them all. So,
we're totally into recycling, you know.
Yeah, that's looking very smart. But in fact, I'm looking at your note here, and people can sign up to this, I assume, SP Angel note, and BHP Billiton has launched a hostile bid for Rio Tinto in February to with a deal fell away, but they've done it again. So they're going for, this says to me, this is a copper story, John, really, isn't it? Because you've got Anglo-American, they're launching a bid for Anglo-American. I think 31 billion, was that right? Is that the number come off my head?
Yeah, it's a share issue deal, so the relative valuations will be the same, but the quantum will change according to the prices of Anglo-American and BHP, or really BHP. So yes, as you say, it's all about copper. BHP, like everybody else, have identified they want to own more copper production. They want to own good quality copper production, and one of the cheapest ways to get their hands on that is to buy Anglo-American. They've told the board of Anglo they don't want the assets in South Africa. They don't want Anglo Platinum. They don't want Kumba iron ore. They really just want the copper business. There is an iron ore business in Brazil as well that has value, and there are other bits and pieces in the Anglo portfolio that will be quite nice. But for BHP, it's pretty easy acquisition to absorb, and then it's bye Anglo.
Yeah, well, another sad thing. I mean, this is held. I hold this in my fund, which I hold the top 50 dividend yielding stocks in the FTSE 350. And of course, this goes, that'll be gone. But like I said, it's the copper story, because everyone realizes that copper is going to be, a hot commod as we go forward. Again, in traditional uses and in, the new sort of technology coming out, all the EVs and all that, need twice as much copper. And so BHP want more exposure to copper, and there's lack of tier one mines around. Is that right? So they want to get some of Anglo's assets.
It's been very hard to find new large-scale copper mines, and they take years to discover, and then you have to go through the permitting process, etc., etc. And especially with these large companies, they are very methodical, but also quite slow about bringing these things on. So it's just easier for these guys to buy them, and they've got tons of cash to go and buy assets if they want to. In this case, BHP are offering their shares, so they feel that their paper is reasonably well valued. I suspect all these companies will actually go up, because copper prices, they've gone through $10,000 a ton today for the first time in some years. And I suspect copper will carry on going higher. So what we know is that China is producing a lot of electric vehicles. Those electric vehicles, each one of those cars uses at least twice as much copper as a normal internal combustion engine car. In fact, you might be interested to know that with the floods in Dubai, people are still able to drive their electric vehicles in the flooded waters, whereas the internal combustion engines were all getting flooded and destroyed.
Yeah. So I suppose with the climate change happening, that'll happen more often. But so what's going to happen now? Because let's go back to the Anglo-Asian share price, because I know that people are saying it's a low ball offer, cheeky bid. But on the one hand, look at the Anglo-American. Yeah, Anglo-American share price. It hasn't been performing, is it? Literally, it hit a high April 2022 of 41.95. It's now pre-bid. It was down at 22 quid pretty much 41 quid, so halved. It's now gapped up pretty much to 25 quid. And you've got the board and everyone in the shareholders saying, oh, how dare you, on such a low ball offer. And they secretly turn around, yes. Because this is going to be now fought over, isn't it? I mean, they're going to reject it. Someone else is going to step through. They've got some excellent copper assets. We need to get in there. So this will be a bidding war, won't it?
I wouldn't be surprised if a Chinese company came in. Maybe the Americans, one of the American copper players might come in, perhaps even Barrick Gold. Although Barrick Gold sounds like a gold company, it also produces copper, and it's very interested in producing more copper. So I think the guy, Mark Bristow, who runs Barrick, will be very keen on running a slide rule over buying Anglo. And because he's a South African, I think he'd quite like to own Anglo American. That would look nice in his portfolio. So I think there are going to be other offers, and it may be that BHP then decide to go after Rio Tinto. Now, I know Rio's is a much bigger business, but BHP nearly merged with Rio's back in 2008. It didn't happen at the time because the global financial crisis, which I remember being all about subprime, and then the collapse of Lehman Brothers, that caused a banking crisis, and that meant that BHP weren't able to scrape the money together to buy Rio's. Yeah. Now, of course, the world is a different place today. There is much more cash within the banking system, and I don't think there's any great problems with the banking system. So it wouldn't surprise me if this is more of a warm-up. This is like a boxer in the ring saying, okay, I'm going to warm up with Anglo American, and then I'm going to go for a knockout punch at Rio Tinto. Yeah,
well, let's have a look. So Anglo American here, they're now showing at 26 quid a share. They're now showing 34 billion. Now, 31 was offered. BHP, their market cap is showing currently 119 billion, so 120 billion, let's say. So they are 4 times the size, pretty much, of Anglo. So what's the size of Rio? Let's look at Rio Tinto. Because Rio Tinto, they're 115, so they're very similar size to. That's a big, so that'll be a bit more, but it'll be interesting to see what's happening. But I suppose, on this theme, let's go on the scale a bit. Early in the week, a junior listed, what's Base now? Base is, Base Resources market cap, 152 million. That's after what? Was that 100% premium bid, was it?
I believe it was 188% premium on that offer. The offer is made by Energy Fuels Inc. They are a uranium and rare earth producer in the United States, and I think they want to do more rare earth production. And the reason to buy Base is because their new Toliara project has quite a lot of monazite in it, and monazite is a mineral that contains about five rare earths, and quite important rare earths. So this is an easy way for Energy Fuels to effectively create more rare earth production. Now, they are taking a risk because the Madagascar government hasn't given Base Resources permission to start building the mine yet. But I reckon the Americans, they probably feel the American embassy might help to push things along a little bit for them.
Yeah. Well, that chart there is very reminiscent of Anglo-American's chart. Literally, trend down for literally since August 2022, the same time. The peak there was obviously in commodities, and then a gap up, but a bigger gap up, obviously, of course, in Base Resources there. But it's kind of exciting, John, is it? In your space, there's a lot of stuff going on there. This tends to happen, doesn't it, at the bottom of the market?
Just about every chart in the mining sector looks like that. Just to a greater or lesser degree. I mean, sadly, some of the juniors have been hit even harder. But it does feel like they're turning around. I bought some Kavango the other day. That's moved up very nicely. So I'm buying back into the market again. Maybe I'm buying in too early. Maybe I'm not. You never quite know. But it does feel that some of these stocks really shouldn't go down from here. And it does feel as if, well, certainly the market's getting better. Copper prices are up. Other metals prices are up. Gold prices are particularly up, and in fact doing quite well, even though there was a little setback in the week with the gold price, but actually it's picking up again. So we never quite know where it's going, but it's looking better anyway.
Yeah, no. I mean, when you have a, do you know what? There's a couple of these companies. Like there's a Kavango there. We've looked at this chart before, and it's a good looking chart there. Because what you've got, I said, huge come down. If you go back to again September 2022, 21, there actually it was at 6 pence a share, and it's come all the way down to literally 90% of its value gone to 0.5. And now it's rallied very strongly. But this base, I quite like this, this is bouncing off this level here, 0.6. Look at that. So it's gone from 6 to 0.6, which is, what's that? It's 99%, 95% of its value gone. And now it's starting around. I quite like that. It may need to sort of consolidate and go sideways a bit here, like almost like cup and handle formation, where it rises up, comes around again, then bangs up again, and that's just down to supply and demand there. But but if you look at just bigger indices, John, I mean, the FTSE 100 this week has done 4 days of brand new all-time highs, and of course, a lot of miners, a lot of banks, all that in there. So it's up here to 81.20 pretty much, and that will attract a lot of this is down to, of course, the the strengthening dollar, because they're pushing out the interest rate reduction to further out dates, and Europe, UK may go sooner. So the pound's weakening, the dollar's getting stronger. FTSE 100 companies largely denominated, their earnings are in dollars, so that helps a lot. But nevertheless, when you get an indices that's underperformed for a while, attracting new highs, money inflow happens. And if you look at the Japan stock market, money inflow started happening after they started rising after a low. And FTSE is good value. It's actually half the value of the S&P 500, and there's lots of dividend payers in it. S&P 500 pretty much is rolling over a little bit. And so I just said on Twitter earlier, where would you prefer to put your money? In an index where it's good value and is starting to show an uptrend, or an index at the S&P that's at a higher value, it's probably fully valued and it's rolling over. So I think this is good for the entire market, because of course once you start going at the bigger stocks and they start rallying, you start going down and looking at smaller stocks, taking on a bit more risk. So I think this is good for the entire market. Now, where's it? 250? 250 is trying to break up recent highs, and AIM. Let's look at the AIM all share. Again, it's teetering on that edge of trying to break these recent highs. So I think you're right, John. I think it's looking exciting, and like I say, this kind of consolidation, this kind of mergers and acquisitions tend to come, don't they, when the market's at a bottom, because there's some cheap deals to be had. And I think BHP now got their shopping basket out and they're looking around for things.
Well, there's definitely more M&A going on. We can see that with 2 offers this week in the mining sector. That just brings more interest. It brings new cash into the market. Clearly, it brings money in from the deals that are being done, and it all tends to feed on itself. So yeah, M&A activity generally lifts the market. Yeah.
Okay. So that's the thing. Like on your list here, we pre-added a list here. So sovereign metals, John, just explain what's sovereign about again, and what's the news there?
Well, Sovereign have a rutile project in Malawi. Malawi is a nice African country. It's seen as pretty simple. There's lots of
you mean simple to operate rather than the people being simple, yeah?
Yes. The people are nice and sophisticated, but the project should be relatively straightforward. As I say, it's a rutile project, which is a valuable form of titanium mineral sand. Very simple. We think it'll be very simple mining. I was with management yesterday, and they were describing some of the engineering issues, but it all looks pretty simple from our perspective, certainly in mining terms. And it was very useful to hear that there's lots of debt available for project development in Malawi, which is good news. Rio Tinto are backing the project. They own 15%, and they put, I think it was $42 million into the company when they bought that stake. Rio's are very closely involved with helping the management with the ESG, with the technical issues in relation to the future development of the project. So it feels like Rio Tinto are taking it extremely seriously, and maybe Rio's will buy this project out in a year's time. So for me, I think there's lots of upside, because as the company works through its full feasibility study, I'm quite confident they will show additional value to the project And as that value builds, hopefully the share price will follow.
Okay, let's look at the OMI, which is Orosur Mining. What's happening there? Remind us what Orosur do again, if you could.
Yeah, we act as nomad and broker at Orosur. They have a gold project in Colombia called ANZA. And because of the acquisition of their joint venture partner, they're hopefully going to get 100% of the project back again. So at the moment, I think they're on 50% of the project. When they regain full control of it, they'll be able to push ahead on the drilling. And this is a nice looking gold project. Yeah, okay, we can't say it's going to be a mine just yet, but I think it's got a reasonable chance of being something more important, more successful going forwards. And Colombia is not a bad place for that sort of development. So I think regaining 100% of the project is good for Orosur.
Yeah. Again, that's looking is quite promising. Look at that. It hasn't been over that 200-day moving average, the red line there, for a while. And it's broken above it then. You normally see that at the bottom, and it'll pull back a bit after a good rally, and now it's above it again. So it's good. It's above that 200-day moving average. A lot of these charts are starting to see, bottoming formation happening. Okay, and the last one, Power Metals. What's happening there, John?
Those guys have been busy in Botswana at the Malopo Farms project. Mm-hmm. No palms there, just farms. Botswana's a dry sort of semi-desert area, or much of it is. But they have drilled into a target. We haven't got assays from that target yet, but it's showing the sorts of mineralization that they were after. So I don't want to get too excited yet, because this is more about finding structure before they find, a real project. But you never know. I mean, maybe they've got some interesting grades that will come out in the assays. So, it's definitely worth watching. Power Metals, they've got a big and wide-ranging portfolio of mineral projects, and sooner or later they are going to come up with the creation of some real value.
Yeah. It's like, exactly. It's like, the Grand National backing all 30 horses. You're going to get a winner somewhere. But the thing is with that, when they are drilling, they're going to get some kind of mineralization results, aren't they? Or, because you do some surveys beforehand, geothermal, whatever you do. And if you didn't come up with I've never seen an RNS release from a resource company that said, nope, nothing there. Nothing at all. But oil and gas is different. But with minerals, there's got to be some minerals there somewhere. It just depends on the quality of it, surely.
We have seen a few releases where nothing has been found. They do have mad.
Well, did they just say in the release? I don't the RNS say, nope, nothing. Move on. I just love that. Just a couple of words.
Well, I respect a management team that do that, because it's very important to drop things that are not successful and to move on as fast as possible.
But they don't, though, do they? Most of them, I've read literally, I'll read, in fact, oil and gas are worse than this, but I've read, RNSs, and I literally, it's so technical and complex sometimes, thinking, did you find anything? That's all I want to know. They go on the technical, and then you have to wait until the market opens and the stock crashes. And they obviously didn't have. So sometimes it is couched in all this technical jargon, and you can't make out what the heck. Did you find anything? That's all I want to know. Yes or no?
I share your sentiments, Justin, but in this case, I think we're going to have to wait for the assays to know whether they're onto something. One hole doesn't create a project on its own, but within the area, within the region that they're exploring in, there have been discoveries of value. I mean, you're away from Zambia. I still prefer copper exploration in Zambia, but Kavango and Power Metals, there is a reasonable chance they'll find something of value. So so that makes it an interesting stock.
Yeah. Okay. Pow. It's again, it's struggling to get above that 200-day there. It's rallied up, come back down. But who knows if they release it, the story stocks there, so release good news on that exploration there, and it should go well. Marvellous stuff. And like I said, just quick, I think we finish off on the chart of copper, because it is rallying strongly. And of course, Dr. Copper, that's what it's called, because of its ability to judge as a barometer for economic growth, I suppose. So if that starts rallying, we should all say, hey, all right. Hopefully, in fact, the copper's done well, isn't it? The last, since 2016. In fact, the big dip and the gap.
I mean, in many respects, it's fallen behind in an inflationary environment. And I really think the key driver for copper now is not just economic growth or economic activity, but it's really the construction of so many electric vehicles, particularly by China. I mean, if China wants to make millions of electric vehicles, it's going to have to buy millions more tons of copper. It's as simple as that.
Yeah, that's interesting, actually, because when you think about it, there's a lot of talk about development of the battery and how it may go from being lithium and all that base to something else. But whatever you use, copper's needed, isn't it?
It absolutely is. But while you're mentioning batteries, the news flow that we see on developments for lithium-ion batteries is extraordinary. I mean, we're now seeing regular stories about 1,000-mile batteries. So when you charge your battery, in theory, it could take you 1,000 miles. I mean, I don't think you want to run it down that low. And also charging rates, companies are coming out saying the charging rates are much faster. And the rate of development on new ideas for battery chemistry is quite extraordinary. And I really think over the next 10 years, the electric cars are going to be an absolute must-have. I think, much as I like combustion engine vehicles, I like the feel and the noise and everything, I just think we're moving away from that at a rate of knots. And this is, give it 10 years' time, you won't even think about buying a combustion car anymore.
Yeah, no, I completely agree. And it follows every other path of technical advancement and development, isn't it? The more that goes into, the more money goes into it, the more people buy. It's self-fueling, isn't it? You have to start getting that wheel. The more people buy these cars, the more development goes into them, and so you almost get that exponential growth. It's like the microchip, how that doubles in speed every 18 months, so ridiculous. So that's the way it works. But when you say 1,000-mile battery, I thought, is there a car attached, or is it just a battery with 4 wheels on it, like a remote control? Because you need to have people on board and all that stuff. Just a little battery, go 1,000 miles, but no, with no passengers. So hopefully we'll get there. No, it'll follow that development path, definitely. And right now we're in that ramp up. We're still, what is it, 3% of the world's transport still? It's only 3%. So that the money doesn't plow into it really until you get to sort of 5-10%. Then you start seeing huge advancements in the technology. But
and you know what's so good about this, Justin, is the Chinese are producing cars at probably half the price that we can buy cars for in the UK. But the Europeans have been charging a lot of money for their cars over the years, and China is going to come in and undercut them by 30, 40, 50%. I mean, I think we'll be able to go out and buy a half-decent electric vehicle for £10,000 in the next year or two. It's just a question of when they go on sale. And why not? Because I think they'll be good quality, and I think the cost of motoring is going to come down a lot.
Yeah, well, part of that thing is the good news is that Chinese dominate that market. Anything that Chinese dominates worries me a little bit. But no, I know what you mean. And if you look at all the European cars, their brands, and like we've always driven literally BM or Merc, something like that, right? This year, for the first time ever, we bought a Hyundai, right, a 4x4 Hyundai, and it was a better quality than the last BM. Honestly, it's a better drive than the last BM. And you get a lot more with it for the money. I'm thinking, the quality is there now, absolutely there. And so I don't care about brand of cars. It's like, literally, with the BM, if you break the wing mirror, you pay like 700 quid. What the heck? Yeah. And that's not the case with, I think a lot of people are going to be shopping elsewhere when it comes, because the Germans, all these brands, they're very expensive, and they're not, they're okay, but they're not, the Far East cars are catching up. Well, I think most of them are there, quality-wise. Absolutely. Why would you spend extra 10 grand for 20 grand for a car when you don't need to?
The big difference between Western manufacturing and Chinese manufacturing is the Chinese produce as much as they can, as cheap as they can. Whereas in the West, we try to produce things that we could, manufacturers try to sell vehicles at the maximum possible price, and they're not so bothered about how many they sell. And there's a big difference in philosophy there.
Yeah, but I think people are literally chopping down on brands. And I think you see this on the supermarket everywhere. Do you remember years ago, John, like 20 years ago, you want to be seen buying, the best brands in the supermarket. Now you're a bit of a fool if you aren't paying for the German discounters brands because they're good and you are spending like 20% less. It's like it just makes monetary sense. Why would you just spend something because of the brand? It doesn't matter. You're being ripped off essentially. I think a lot of people are now disregarding brands a little bit, and they're going for quality rather than just the brand name. Anyway, we've digressed there a bit. Thanks for that, John, and we're speaking next week.
Thank you, Justin.
The Share Pickers Podcast with Justin Waite. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.